Hello and welcome to our presentation about the well-known Dutch brewery Heineken. We would like to start out by presenting ourselves. We are a consulting group consisting of 4 members: Silas Trosbach, Nikolaj Gade, Mads Didriksen and Alexander Eilskov. Heineken is a Dutch worldwide brewing company with a wide international presence through a global network of distributors and breweries. Heineken is the second largest company in the world on the beer market, selling beers in 170 countries and brewing beer at more than 110 company-owned breweries in more than 50 countries. The company sells more than 250 beer brands, including international premium, regional, local and specialty beer, which makes them able to reach customers with different tastes. The Heineken family have been in charge for most of its existence, and today the company has a reputation for its high standards and qualities. Heineken has hired our consultancy group to analyze, evaluate and present Heineken's past and current financial situation. The analysis includes a strategic analysis, which is an important starting point for an analysis of financial statements, as it allows us to study the economics of Heineken at a qualitative level. Heineken operates in most of the world, but where Heineken has its main focus is in Europe, North and South America, Africa, Middle East and Asia Pacific. And the global beer market is highly influenced by a few large companies. These companies include Heineken and its main competitors Carlsberg, SAP-Miller, Anheuser-Busch, who all account for 17.4% of the global market share.
As mentioned, the global beer market is highly influenced by a few large companies. These companies include Carlsberg, SAP-Miller, Anheuser-Busch and Heineken, and they account for 70.4% of the global market share. The global beer market saw a moderate rate of value growth through the years 2010 to 2014. The performance of the market is forecast to accelerate with an anticipated compound annual growth rate of 4.1% for the 5-year period 2014 to 2019. As well as the growth rate is anticipated to grow, so is the volume of the global beer market with an increase of 17.4% in the period 2014 to 2019. Currently it is Anheuser-Busch leader with 29.6% of the market share. Today Heineken is the second largest brewing company with a market share of 17.7%, and SAP-Miller and Carlsberg has respectively 15% and 8.1%. Heineken has some strengths with a brand portfolio that includes more than 250 international, premium, regional, local and specialty beers and ciders, which makes them available in more than 180 countries and has created a strong brand globally. However, Heineken is a big company which acquired to maintain corporate values, image and quality standards in operating countries, which could be a challenge. Furthermore, as the big global company Heineken is, they have the opportunity to acquire or to make a joint venture with new uprising companies in emerging markets, like they did with Asia Pacific Brewery, which caused a growth in the Asia Pacific market. Nevertheless, it is inevitable to ignore the main competitors operating.
When analyzing the financial situation of Heineken, we compare it to its closest competitors to figure out where they stand. It quickly comes to eye that the market leader has quite the profitability compared to the other actors. Despite that, Heineken maintains solid ratios and show fine results, although having some posts that increase expenses compared to the others. Heineken has good activities and handle its short-term loans good. From an investor's point of view, Heineken may not seem to be the obvious choice in the first instance, that again compared to the other actors, but the company keep rates down to open up for potential new investors. When keeping some ratios down, Heineken allows for investors who has faith in the success of Heineken's future for investment. In addition to that, Heineken yields quite nicely with a 2.1% and have good earnings per share given its price. Analyzing the cash flow of the company also speaks good for the progress of current investors, and it aids in attracting more and newcoming shareholders or investors. With gearing and investing ratios set for both investment and additional borrowings, Heineken is currently in a position where they can positively consider new investments. And with the calculations like covering ratio speaking for, new investors could easily jump on board for this.
The Asian Pacific market shows great potential for future investments, but Heineken only possesses 3.5% of the total market share. It is forecast that the market will grow 5.36% annually, resulting in a 29% volume increase in 2019 compared to 2014. Heineken can be a part of this, but needs investors or creditors to support its marketing plan for the Asian Pacific market. The marketing plan, which is expected to add 5% to the annual growth, which then in 2019 will result in Heineken having 4.5% of the total Asian Pacific market share, which is an increase of 30.5% from the original result, which only increased by 8.5%. Furthermore, the plan provides a significantly higher annual growth of the market share. This forecast is that Heineken will end up with a volume of 4,400 million liters, an increase of 30.6%, and a profit of 1,095 million euro, which is 265 million euros higher than originally. In order to make this investment, Heineken needs to get 300 million euro initially from investors for an investment whose payback period is calculated to be 3 years and 151 days. The investment has a net present value of 195 million euros, which means that the current value of the investment compared to the amount banking the money with interest and cost of capital of 8% would provide is 195 million euros. In other words, after this investment is made, provided the cost of capital is the same, Heineken will be able to borrow 195 million euros in the bank and divide it among shareholders without losing money. The investment has a 24% internal rate of return, where with the same cost of capital, this means that the interest will have to be 200% bigger in order for the investment to make zero profit. The accounting rate of return of the investment is 44%, which means that the investment on average will generate 44% of the initial investment each year, almost half the investment. In relation to risks, calculations has been made to illustrate this important aspect of investments. The initial investment can be 66% higher without changing the cash inflow each year before it's not profitable anymore. The interest can grow 200% from 8 to 24% before the investment gains no profit, corresponding to the internal rate of return, and the exponential cash inflow each year can vary from 669% lower in the beginning of the investment to 112% lower by the end and still be profitable.